Time now for the markets with Leighton. And Leighton, you say that November beans set some contract highs this week?
That's right, Artis. For the last 4 trading sessions, in fact, as we record at midday here on Thursday. Also ahead, continued talk of lower yields supports corn prices. U.S. poultry production is down, and contraction continues for the farm-raised catfish industry. Nationally, traders are now becoming concerned about falling crop condition ratings for corn in the Midwest. The latest indication was ProFarmer's sampling report, which showed a national average corn yield of almost 148 bushels per acre. DTN cites the corn market as being overbought at the moment. Analyst Tom Fitzenmeyer had this reaction to the overbought scenario, as well as that ProFarmer assessment.
I think the trade had been assuming, after listening to their state-by-state reports through the week, that they were probably going to come out closer to 146. So that 147.8 or whatever number they came up with Friday afternoon may have been a little disappointing to the trade. You know, part of the big run-up here at the end of the week was in anticipation of a kind of a low-ball number from them that we didn't quite get. So, but like you say, there's more talk of Goss's wilt. Every time you talk to a farmer and it's gone out in their field to check, they come back disappointed. So, you know, expectations are that the weekly crop condition rating is going to see another slight decline on Monday afternoon when that comes out.
Actually, the crop condition report on Monday night showed a 54% good to excellent rating for corn. The market was lower, sparking buying interest as traders are scared to be short corn. Well, turning to rice now, rice futures ended the month of August by moving above $18 after closing above recent resistance. AgFacts.com reports that a much smaller crop in Arkansas is giving the market fundamental support. Other positive factors for rice include concern about the summer heat's impact on the crop, as well as some firming international markets. Arkansas Farm Bureau notes that slow demand may limit upside potential for rice. However, this year's limited supply will leave stocks tight. DTN cites the soybean market as being overbought as the month of September begins. Drovers Cattle Network says a correction may not begin until the November beans move above $15. Analyst Tom Fitzenmeyer notes that beans had pretty much been in a trading range of 13 to 14 since January until prices broke out less than a week before the end of August.
And breaking out above that is a positive signal technically, and probably signals that there's a chance we're going to move beans on up closer to $15. So there is some decent upside potential here. Crush has been pretty marginal. There's been some pickup in the biodiesel industry, so that's helped support bean oil a little bit. But again, you're getting that 14.5 to 15 range, and beans are going to struggle here.
Before we head into the livestock markets, here's our trivia question this week. What is the record for a chicken laying the most eggs in one day? Is it 3 or 5 or 7 or 9? You decide and stay with us for the answer. As August closed out, the USDA reported that poultry production during July was down 2% on the year. The monthly total was just over 3.5 billion pounds in the U.S. Chicken slaughter was down even more, 5%. Totaling over 700 million head. By the way, chickens averaged over 5.5 pounds per bird, which is an increase of 3% on the year. Poultry producer Sanderson Farms, which is headquartered in Laurel, reports that while grocery store demand remains steady, food service demand is described as sluggish. With feed cost expected to continue to be high, Sanderson said last week it will extend its previously scheduled holiday production cuts into calendar year 2012 to try and balance supply and demand. As we reported here last week, pond bank catfish prices are still up and continuing to rise according to the government. But the same report notes that sales are down. Extension Ag economist John Michael Riley discussed the status of the aquaculture industry in Mississippi with me on Wednesday.
Well, the current status is one of contraction for the most part. We've seen this taking place over the past number of years, especially going back to the summer of 2008 when prices for ag commodities began rising quite substantially. That put quite a strain on catfish growers. The feed prices that we're facing were quite high, And since then, we have seen water acres decrease. Right now, we're year-over-year drop of about 30 to 40%, depending on which state you're talking about. In terms of production, we've seen the sales of catfish off-grower farms now at a level that we have to go all the way back to 1989 to get a comparative number. So, and most of this reduction has occurred in the past couple of months. On the other side of the equation, you know, so that's the supply side looks really good. We've seen the grower price increase. Current estimate of $1.23 a pound compared to about 78 cents a pound the year prior. So we have seen prices for growers increase. But the other side of the equation here is demand. Total catfish sales are down from the 5-year average. Most of that is due to fillet sales dropping off significantly, down about 33% from the 5-year average. All of this really, you know, from both production and consumption side is largely attributable to feed prices. We've seen soybean prices increase over the past, you know, since summer 2008. They came down for 09 and 10, but they're up quite significantly here in 2011, which doesn't bode well for this contracting industry. It only speaks to maybe further contraction to some degree.
Well, it takes fuel to run aerators around fish ponds, just like it takes fuel to run tractors and other farm equipment. OPEC's weekly oil price rebounded slightly on August 29th to over $106 per barrel. After a downward trend recently, concerns over hurricanes and Libyan unrest sent the oil market higher. Analyst Jamie Kohaki says if and when the price ever drops back towards $80, it's time to lock some in.
OPEC seems to think $70 crude was the old $40 crude,
right.
And they think it's bone cheap. I don't agree with that, but I think as a producer, you know, high 70s, low 80s, get some hedging on there or lock some in, so that way we can come in and do some forecasting with some futures pricing.
Trivia answers the last stop before our feature story, so let's take a quick look. C is the correct choice this time. 7 is the record for a chicken laying the most eggs in one day.